Why commercial mortgage brokers are winning more deals than traditional bankers. And the commercial lending industry has changed dramatically over the past decade. And today's commercial real estate investors, as well as business owners, don't want to simply hear yes or no from a single bank. They want choices. They want competitive loan terms. They want financing that fits their investment, not financing that fits one institution's lending box. And that shift is why commercial mortgage brokers and capital advisors continue to capture more market share, while traditional bank lenders are often losing opportunities. Now, commercial borrowers want options, and that's no secret. And every commercial property is different. And a lender that loves multifamily may avoid hotels entirely. And a bank that finances owner-occupied buildings may decline investment properties. And one lender may require 35% down, while another may approve the same project with 20% down. Which one are you going to choose? Borrowers deserve access to all of those possibilities, not just whichever products happen to be available at one local bank. Hundreds of lending sources. And modern commercial brokers have access to hundreds of lending sources, including local banks and regional banks and national banks, but credit unions and life insurance companies and CMBS lenders and SBA lenders and USDA lending programs and HUD financing, as well as bridge lenders and construction lenders and private capital sources. So instead of forcing a borrower into one lending box, capital advisors compare multiple solutions to identify the best overall financing strategy. Better loan structures. An interest rate is only one part of a commercial loan. And experienced commercial mortgage brokers compare a few additional items. So fixed versus variable rates and what their options are, and amortization periods and interest-only options, as well as recourse versus non-recourse loans and prepayment penalties and cash-out flexibility, construction financing, but also future refinancing opportunities. And the right structure often saves significantly more money than simply choosing the lowest advertised rate. Faster approvals. Because experienced capital advisors understand lender guidelines, they know where a deal fits before it's submitted. So instead of sending the same loan everywhere and hoping somebody approves it with a shotgun approach, we can target lenders that actively want that particular asset type. What that means is fewer denied applications, faster underwriting, less documentation, better borrower experience, but most importantly, higher closing ratios. And one of the biggest advantages of working with a commercial mortgage broker is improved execution. More financing options means more approvals and better contingency planning and fewer surprises, but also a stronger negotiating position with higher closing percentages. And the result is more successful transactions for investors, developers, brokers, and business owners. So why capital advisors are replacing the single bank model? And commercial real estate has become increasingly specialized. And different lenders compete for different property types, which can include multifamily and retail and office and industrial and hospitality and self-storage and mobile home parks and medical and assisted living and mixed use and in land development. And no single bank is the best fit for every transaction is the point. And capital advisors act as advocates for their borrowers by matching each deal with lenders that are actively seeking that specific opportunity. So the future of commercial lending is here. And technology has transformed commercial lending. And borrowers now expect multiple financing options and competitive pricing and faster approvals and digital underwriting and transparent communication and expert loan structuring. And commercial mortgage brokers deliver exactly what today's market is demanding. And as financing becomes increasingly specialized, having access to hundreds of lenders creates a distinct competitive advantage that traditional single bank lending models simply cannot match. So, final thoughts for the day. Whether you're purchasing your first commercial property or financing your next portfolio acquisition, having access to multiple lending sources gives you more flexibility, more negotiating power, and more opportunities to close successfully. And the future belongs to advisors, not order takers. So if you could offer your clients hundreds of lending options instead of just one, how many more deals would you close? Food for thought. My name is Bill Rapp. I work for CommLoan. Please visit my website, billrapp.commloan.com. You can start a pricing quote and or schedule a consultation directly with me so we can have a conversation. Thank you for watching. Have a good day.